Yes.
Will this continue into next year? Tim Seymour is the CIO of Seymour Asset Management and a CNBC contributor.
Hey, Kelly.
So thank goodness AI came along when it did, because the market in 2022 didn't look so hot. Thank goodness the rest of the market is now feeling better as the AI trade stumbles. Can it be that easy?
Well, I think the other 493 are not only reaping some of the benefits of AI, but I think you have a dynamic here where you definitely are seeing EPS growth. You are seeing margin accretion as opposed to what we're all debating today, at least about Broadcom margin degradation. So the dynamic of rotation is great. I think it always is relative to where you're coming from. I think these are markets that are heavily overweight, at least a lot of large institutional and retail investors into AI and some parts of the tech trade. I think today's price action also is a function of, this is almost a 20% move in the semiconductors, the stocks, the SMH, whatever you're following from that intraday bounce back 3 weeks ago. This is a massive move, and we're at all-time highs. And so today feels kind of painful, and two leaders in Oracle and Broadcom have told you messages that are a little concerning. I don't think people should be running out the door here. I do think, talking about international, talking about some of the trends, that it is about evaluation, confidence that valuations are not extreme, confidence that you see EPS growth, confidence that the global dynamics in the economy that we at least know right now says the dollar could be a little weaker. Other central banks, if anything, might be leaning into not only on pause, but maybe hiking a little bit. That global growth is okay.
Yeah.
And that's a decent setup for the other 493 and international.
So you stick with it. You love the rotation. You lean into it?
You lean into it because I also think that healthcare was overdone to the downside. I love banks here. I love the cyclicality that is there, as long as, the Fed told us this week, and that's part of the reason also why I think the markets are pulling back a little bit. You've got two Fed presidents weighing in today, trying to tamp down some of that dovishness. But,
I see.
But I think banks, cyclicality, healthcare, industrials, GM, airlines, these are places where the valuations are good and the story's good and the earnings profile is very good.
What if people start to really panic or jump out of the AI trade? Or is it possible they're just taking profits on what has frankly been a very good year?
I'm hearing from investors, there are people that are nervous, but I would just go back to where are we coming from? We've had a massive move and we've rallied substantially. Jumping out of windows, I think the dynamic here is that there's a lot of money that's been pushed into the trade that's somewhere out 3 years. What we've heard over the last couple of days is we don't really know what the margin profile is going to be. We don't really know if some of these customers. Jay talked about the debt profile. That's thrown a different light on even, hyperscalers, the Mag 7s. Absolutely. That at least have suddenly been, they were free cash flow machines, but suddenly they may not be. That means these things might trade at a different multiple. But I think if you're running too far away from Google and Meta, I think even NVIDIA, I understand that that's the more central part of, are their margins going lower? And if they are, then this stock might not be as cheap as it seems, because right now in valuation,
right,
it's not
24
Broadcom.
times, right.
Yeah.